Gold has been going up rapidly lately. Just in January of 2026, monthly gain was over 15%. It's the strongest performance since the 70s. Certainly, gold investors are happy right now. But what was the deal in the 70s? Today, we will dive into the great 70s gold rally, explore the market dynamics and worldview of this era. First graph is the inflation adjusted gold value in 100 years, and second shows nominal performance. Let's focus on the inflation adjusted graph so that we can disregard dollar's value loss over the years. In this broad view, it can be roughly said that gold mostly protects its value against inflation, especially until 1968 because of Bretton Woods. However, there are three major gold rallies that can be seen: 1970s, late 2000s, and 2020s. Each decade corresponds to huge global crises: 70s oil crisis, late 2000s real estate crisis, and 2020s pandemic, Russia-Ukraine war, Chinese rise, etc. These uncertainties, threats, and excessive spendings are one of the key factors of worldwide high inflation, volume loss on global trade, growing unemployment rates, and money flow from risky assets to safer assets. Let's check the 70s uncertainties. Nixon's shock. In August 15, 1971, United States President Nixon announced that convertibility of the US dollar to gold is suspended, ending the Bretton Woods fixed exchange system. Furthermore, President imposed temporary wage and price controls. The decision is made mainly to address US structural economic problems, but also were to protect the gold reserves, pressure Germany, Japan and their industries, and lower the budget deficits after Vietnam War. While it helped FED to protect gold reserves and devalue the dollar, leading to more independent monetary policies, it also introduced currency volatility and speculation. Yom Kippur War and 1973 oil crisis. On October 6, 1973, Egypt and Syria launched a surprise attack on Israel during the Jewish holiday of Yom Kippur, with an aim to reclaim lost territories in 1967. United States provided roughly $2.2 billion of military aid to Israel. These cumulative events led to escalation of Arab anger. On October 17, 11 days after the beginning of the war, major petroleum exporting Arabic countries imposed embargo on the US and allies. Within 5 months, oil prices went from $3 to $12 per barrel. This is considered to be one of the main reasons of 1970s stagflation in the US, exposing the oil dependency of the Western world. The embargo lifted in March 1974 after US-led diplomacy. End of the Vietnam War. The Vietnam War ended on April 30, 1975, with the US and South Vietnamese forces lost. Not only these 20 years of hostility ended with huge loss, all the investments were thrown in the trash. We are talking about $150 to $175 billion, $1.5 trillion of today's money over the 20 years. War spending led to massive federal deficits and fueled the inflation rate. From 1965 to 1970, the inflation rate went from 1.6% to 5.7%. Nixon's shock temporarily masked the big problems, but couldn't prevent the stagflation that shows up in a few years. Iranian Revolution and 1979 oil crisis. Going back to the Middle East, Persian government was in a bad position. The internal and external threats were taking over country, slowly but surely. The final days of the Persian government was over when the Islamists took over the country in 1979. New government was against the US intervention on the internal issues and took Soviet side on Cold War. Under the new government, Iran's oil production dropped sharply. Before the revolution, Iran was holding 7% of global oil production. This proportion dropped down to roughly 1%. Panic buys and speculations quadrupled the oil prices once again, increasing from $13 per barrel to over $39 per barrel within 5 months. This oil shock was arguably even worse than the 1973 first oil crisis. By the 1980s, US inflation hit 13%, unemployment rose to 7.8%, and GDP shrank by 2.2%. Soviet invasion of Afghanistan. Soviet invasion of Afghanistan began in December 24, 1979, right after the Iranian Revolution and ongoing second oil crisis. Not the results, but the event itself caused massive panic and rise of geopolitical risk indexes. The rise of geopolitical risks with the recent events that happened led to the gold prices rocketing up. Gold was already up from oil shock, $300 per ounce in late 79. Within short time, gold prices made a peak on $850 per ounce, almost tripling. All these geopolitical risks, desire to fight inflation independently from gold, high inflation and unemployment rates globally, budget shortages, and many more reasons led to the Great Gold Rally. Here is the gold prices yearly from 1970 to 1980. As you see on the graph, massive returns for such a low-risk asset. While gold rocketed up for a decade, the rest of the markets were bleeding fast. Let's check the 1980s stock market. The 1970s were a challenging decade for US stocks. High inflation, averaged 7 to 10% annually, slow economic growth, and rising unemployment were affecting the overall performance. Checking the graphics, the S&P 500 delivered approximately 70% return nominally. However, with the cumulative inflation around 140%, real returns were negative, estimated at minus 30% to minus 40% over the period. Stocks underperformed relative to assets like gold, which rose up as an inflation hedge. Although, by the end of the decade, rising interest rates led to inflation rates to drop down, setting the stage of 1980s bull run. What about the following decades? 70s were a major shifting point of global economic policies. World economic policies shifted from post-war era Keynesian policies, which focuses on government intervention to stabilize the economy during recessions, depressions, or high unemployment, to neoliberal policies which were adapted as a reaction to failures of Keynesian policies. Neoliberal policies focused on deregulation, privatization, free trade, globalization, reduced government spendings, and etc. The following years, beginning in the early 80s, neoliberal policies were adapted as the core ideas of global economies. How was the 80s then? Early 80s were not so different than the 70s, although this time the main threat was the inflation and the first few years were spent to tame the inflation. Once the inflation rates were taken care, the recovery was fast. The credibility shift enabled a long US growth streak lasting till the 1990s. After this huge gold rally, gold remained calm for about 30 years. Within this time frame, geopolitical risks decreased, no major wars were fought. Also, huge victories for US and its allies achieved, leading to even less uncertainties. Berlin Wall was diminished, Soviets were collapsed, US became victors of the Cold War, no major threat left for the democracy. That is the end of my video. Thank you for watching me. I've spent a lot of time for the research and build of this video. If you enjoyed, please let me know in the comment section. Take care.